So I have reason to believe that we might have topped out on Monday, although we have yet to see. Let's take a quick glance at the monthly chart. So we can see the monthly chart that is currently printing. We're still trading near the all-time highs, I think within a few percent of all-time highs. So I think more impetus for the market over the next few months, over the next quarter, to travel back down south. Let's take a look at the daily chart. We can see that Monday's trading traded down to about the 50% point of Friday's candle, which was 47.17.25. I actually had a long literally at 47.17 quarters, which had I held on to it would have been over $1,000 in profit, which is true. Unfortunately, I did not hold on to it, but c'est la vie. So looking at Monday's candle, we traded up to about the 50% point of our large sort of black range candle from Wednesday, the 20th of December, which you can see here. Traded almost to the 75% point. It's difficult for me to see exactly what the market was doing. Although I did suggest on Friday's video that we would probably see a move up before we see a move lower. Let's finally take a look at our regular trading hours here on the 30-minute chart. We can see that Monday's trading traded into a regular trading hours gap that we had back between Friday the 29th of December and Tuesday the 2nd of January. And we traded just above the 50% point of that. So the market was just straight up today, no retracement. Looking ahead for Tuesday's trading, I'm thinking that we are going to see some sort of a retracement back lower. I think it's possible, looking at the chart, that Monday might have been our high for the week, and I would expect that the market would come back down and test the regular trading hours open that we had on Monday. So I would expect that to be the case. We might fill in the regular trading hours gap here and trade higher up to about 48.09 quarters, but I'm not calling for that just yet. I think that the market is a little bit overextended and probably going to trade back down into about 47.39. And looking at our 5-minute chart, we can see there wasn't a whole lot of opportunities to trade unless you were long at the beginning of the day. We had a few different opportunities of ICT patterns you could see. I'm circling a fair value gap here and also a fair value gap here that the market traded back into, and you could have gone long on limit orders there. So that's about what I have for you today. It is Monday, January the 8th, 2024. Basically a day that was straight up. I'm expecting that the market is probably going to make some sort of a retracement on Tuesday. I would expect there to be a black candle on Tuesday, but nothing's guaranteed. Also, you can see that we retested here this wick inefficiency to about the 50% right there. So you can see that we came back up and retested this black candle's wick inefficiency right there. So I would expect that the market is probably going to come back down to this daily rejection block here, and that would take us to about 47.31 3/4. Although that might not happen on Tuesday, I think that the market over the course of this week and next week is going to trade back down to the open of this candle from Friday the 5th of January.